We got the Honorable Joe DioGuardi here. He wrote the book, The Unaccountable Congress. It doesn't add up. You'll want to get this book. This book was authored a while back, but it is every bit as applicable today as it was when it was first authored.
They're still unaccountable.
They're still unaccountable. Can you believe that?
I can't.
It's still unaccountable. You know, it may be less accountable than the unaccountability that they had back when he served under the Bush administration. He's also the author of the CFO Act that President Bush signed into law. There is just so much to talk about. Well, welcome to the show. Welcome to Financial Fridays. Thank you so much for appearing on short notice, and it's a privilege to have you here. Thank you for the wonderful book. It's great reading. I suggest that everybody goes out and gets it. It's The Unaccountable Congress. It doesn't add up. Just an amazing book. Welcome.
They can look at that through the website of Truth in Government, and they'd have to look at www.truthingovernment.org. And they'll see a whiteboard animation that cost me $15,000. I had my friends kick in some money so I could make a kind of easy way to show what we're doing to the next generation and those that can't even vote. We're back to taxation without representation. The debt that we're putting on people is so humongous, and the federal government is not using the right accounting system, so we don't know it. And as I said when I ran for the U.S. Senate, here in New York, which is a very tough thing to do when you're a fiscal conservative. I won all the primaries, but I couldn't win the general. I said, hey, we're spending money we don't have. We're borrowing from countries we don't trust, like China, and we may be giving up the American dream in the process. And my old man came here in 1929 at 15, couldn't speak a word of English, but he managed to get me as his oldest son and a couple of others a good education so I could quickly become someone who could count in America as a CPA, and whoever knew that when we moved from the Bronx to Westchester County in 1957, I would be representing this great county in the House of Representatives. That's America for you. I don't know that we're going to keep that kind of opportunity society alive the way we're going today.
And Joe, this Jason, I got to tell you, I did a business presentation, and I spent almost an hour on tax economics, and we're going to be running at $1 trillion deficits again by 2020 unless we have substantial tax increases. And this is like my question to you. I mean, there's no real sense of alarm in the audience. Why is that? I mean, people aren't. I know what you're saying, but people don't seem to be alarmed. At least from my perspective.
Listen, why do you think Congress is evaluated now in polls at less than 15%? I mean, the public is disgusted. Everything is dysfunctional in Washington. Congress just came back, and I sent you a little piece that was put out by the Committee for a Responsible Federal Budget, and the title is House GOP, My Party. I don't want to even talk about parties anymore. But the House GOP kicks off the new Congress with fiscal irresponsibility. They already broke the budget deal. They want to pass an increase in the budget, but off budget. They want to go right past the pay-as-you-go rules. Why? Because they don't want to be charged, for having raised the national debt, so they disguise it. Everybody is more concerned about getting reelected down there than they are about the future of America. And this is why Congress rates below 15% when it comes to, the favorables. It's ridiculous. When I was there, but thank God, I shouldn't say thank God. I was there when Ronald Reagan was there, and he was a lot more sensible about these things than we have today. And people said, oh, he raised he was a big deficit spender. No, if you put the accounting on the right basis and you had a capital budget, you would find out that he built the military, and that could have been all capitalized, but we didn't do it. So therefore, it was put in like today, we don't have a capital budget. So anything that's spent, whether it's a building, a battleship, you name it, it goes right into the deficit. 37 states, Leonard, have a capital budget, but the United States of America does not. So how can you count?
It was fascinating. When I was in school, governmental accounting was one of those courses that you could take in your upper division, and I opted not to because I thought this is just kind of a joke. So I took.
It was a joke. It was fund accounting back in those days. But guess what? If you want to now get a rating and you want to borrow money, you better be prepared to redo those books and come up with a conventional statement the way we had to do in 1975 when I was a tax partner at Arthur Andersen and I was on the team the bailout of New York City never would have happened except that Arthur Anderson worked with the investment banking firm Lazard Frères, Felix Royton, and we had to come up with a conventional financial statement. It took us months to do. The books were in such disrepair. So I know the drill. That's how I learned the difference between government accounting and real accounting. And today it persists.
Well,
and you say, why does it persist? Because we don't have a special interest that runs to Washington, that is highly paid. I mean, I'm a volunteer. I'm like a missionary. I'm trying to do what many, many people should be doing on their own as, informed citizens, but they don't have the ability to hire a lobbyist. So I'm forced now to be that person with a loud voice, with the credentials, the first CPA ever elected to Congress, and the one that put in the legislation that was passed in 1990 to bring a chief financial officer. You might say, well, what did we need that for? Well, we didn't have a CFO. You had the Comptroller General, you had the OMB, you had the Treasury Department, and on the other side, you had bookkeepers, you had controllers, you had all kinds of auditors, but no one that understood how you apply numbers to keep the future of America secure. That's what a CFO is supposed to do. So today we have CFOs, but if you read the article I faxed to you, I'm on the 25th anniversary of that bill. I just wrote an article, and I hope it gets widely published. I gave you a private copy of it that now says we have to change it. We have to put the CFO in the executive office of the president. An independent CFO needs a term like the Comptroller General, 10 to 15 years, cannot be fired, only impeached. Why do I say that? Because you got to take numbers away from politicians, and you got to put the CFO in a position where his term is not, or her, coterminous with a politician's term. And that's what we have in the Comptroller General, a 15-year term, and he is the most trusted accountant in America, but he's a creature of the Congress. I want to create someone like him for the executive branch, but independent of Treasury and OMB. Right now, the CFO that was created because of my act was dumbed down. It was not the one I wanted. They put that person 3 levels down in OMB. So he's a puppet now, a hostage to the administration. This is the problem. We have got to get numbers that are independent, transparent, no conflicts of interest, and we need outside auditors besides. I mean, it's nice that the Comptroller General wants to do an audit, but he is still a government agent. I don't want a government agency auditing another government agency. I want outside CPAs to come in, let them bid on the contract. It just happened with Ernst & Young. They got because I was yelling and screaming, they finally decided, the Department of Defense, to hire an outside accounting firm to begin the process of helping the Air Force to have an auditable set of books. We can't get an audit done for the U.S. government because the military has yet to deliver to the Comptroller General and the GAO an auditable set of books. Believe it or not.
Well, it's interesting that you raised that point because it's one thing to have a requirement. It's another thing to be able to have it provide relevant information that could actually occur, and which is probably why your suggestion it has to be somebody. One of the things that you wrote: federal departments and agencies use a veritable jungle of special purpose, Enron, think Enron, and compatible systems, producing often irrelevant information. So my question to you is yes, this needs to happen, but it sounds as though that what needs to happen with respect to making sure that the processes and systems are proper to begin with, because that sounds like there's a whole litany of steps that have to occur before you can get information that would even begin to be relevant to make decisions on.
Right. Well, on the issue of accounting systems themselves, there's been progress. I can tell you that they finally decided they had to bring in the big guns from Accenture and other firms like that to show that, to make sure that we're not being defrauded. Because if you have systems like we had for the IRS and Medicare and Medicaid, where the government prints checks almost automatically in some cases, and there's no double checking or systems don't speak to each other, by the time you find out that you issued a check that was not proper and try to get it back, I don't know if you saw 60 Minutes a couple of years ago when they ran to Florida. What they found were storefronts that were boarded up. In other words, the people filed for the refunds, filed for the Medicare or Medicaid, whatever it was, and the next thing you know, they shut down, so you couldn't find them. So that's because we didn't have accounting systems that were moving fast enough to talk to each other, compare notes. But that is changing. But what has not changed is what I'm calling for today, and that's the right system of accounting. It's called Generally Accepted Accounting Principles, the accrual basis of accounting with a capital budget. And guess what? It's there already. The Securities and Exchange Commission enforces that system on publicly traded companies to protect shareholders. Otherwise, they would never get a clean audit. The accounting profession has come up with standards of accounting, principles of accounting, called Generally Accepted Accounting Principles, otherwise known as GAAP, GAAP, and those are the principles that are imposed on publicly traded companies. Otherwise, a big accounting firm would never give you a clean opinion, and if you didn't get a clean opinion, you would never be able to sell a share of stock or issue a bond on the market. And now, look at the federal government. You want to talk about a double standard. The federal government is the largest issuer of securities in the world. Where do you think those trillion-dollar debts came from? That's the securities, treasury notes, treasury bonds, and whatnot, and bills that are issued in order to raise money so that we can keep the government going when we are not raising the money from taxes. So do we have a prospectus when that comes out? No. Are we on generally accepted accounting principles? No. Is that a problem for the future? Yes. Well, guess who's waking up? The rating services.
One of the articles you wrote was the deficit was, so many hundreds of billions, but the actual increase in the debt was over $1 trillion.
Now, would you believe I didn't write that article, but I sent it to you. It was written by Wolf Richter, and the title of it is "The U.S. Debt Jumps $18.1 trillion in 2 months." $181 billion in 2 months. That's the last 2 months of this last calendar year, and it hit 18 trillion. But if you went back to the fiscal year, which is the 12 months ending September 30th, 2014, it's basically the same. In fact, I got the actual number. I had to go to my friends at the Congressional Research Service to get the real numbers, and I had them do a little research to me as a courtesy, as a former member, and they did, and here it is. The federal debt, that's the gross debt. The gross debt meaning the bonds that are held by the public and the bonds held by the Social Security trust funds and other trust funds. They call that private debt. But it makes no difference because those have to be converted now to public debt because the baby boomers want their money. And so we're starting to have to convert those private bonds to the marketplace so we can get the money because the Social Security trust fund is now not taking in as much as it's giving out every year. So that's a problem that is going to put us on a track to some problem, maybe, some, not default, but what would you call a deficiency in the fund. But here it is. The 12 months ended September 30th, 2014, $1,173 trillion. That was the increase in the national debt that put it past 18 trillion. Now, why is that important? Because by March, we're going to hit the ceiling again. And Congress has to come back and allow the government to spend more money than it has, and that's going to be another battle. But why do I even say something about that in this article or comment on it? Because if you looked at the deficit based on government accounting, the deficit only was, for the same fiscal year, $648 billion.
Yeah, well, they're saying it's going down,
The deficit's going down, but the debt is going up, and there's the problem.
Well,
because we're on a crazy accounting system that if you added up all the deficits, you'd never get to the statutory debt.
I just want to mention in Chapter 2 of the Unaccountable Congress, that Chapter 2 is called Plastic Budgeting. And that's kind of what's being talked about here with the Honorable Congressman, is there are about 15 different gimmicks from fudging economic numbers to off-budget treatment, which is special purpose type things that Enron did,
right.
To current services budget, to all kinds of fraud, waste, abuse, masking, which is kind of what you're talking about there, trust fund mask. I mean, this is an amazing book. This is what's going on every single day.
And I wrote that book in 1992, updated it when I ran for the Senate in 2010. And you know what? I didn't have to go back and change the numbers because everything I say is true. All you have to do is assume the numbers are greater today than they were in 2010.
Which is fascinating. When I look at this, one of the, and it's hard for me sometimes to listen to the news because one of the news items was the administration wants to put kids through school, community colleges, like 9 million kids at $3,800 per kid. That's $32 billion per year. Right. But the problem with that is if you have a governmental program that does that, then the costs start to rise because it's now become an entitlement. And then you've got to have additional facilities costs, and the $32 billion turns into $132 billion in short order. So my head kind of explodes when I see this because I know the pathway on it, and it's not a good pathway because it just keeps on going down that pathway of, gee, that's another $132, but we're going to get this from.
And you know what? One of the big differences between the $1.1 trillion I talked about that we had to, bring in by selling bonds last year, fiscal year, and the deficit of only $648. You would say, why aren't they the same? If the deficit is $648, why is it that we're borrowing $1.1 trillion? Why? Because things like those student loans are off budget. This is the problem. They go around the budget. It's like what used to be happening back in the 40s when corporations said, I'm not going to charge that extraordinary expenditure to the P&L. I'm going to go right through surplus. It used to be called surplus adjustments. That's illegal now. You can't do that. Everything that is a loss, even if it's extraordinary, if you're a publicly traded company, has to be put through the profit and the loss, so we know it. But the government doesn't follow that. Therefore, the deficit is $648 billion, but we had to issue $1.1 trillion in bonds.
Okay, so we recognize the federal government is a little bit out of control. I mean, I think
way out of control.
Yeah, that's kind of an understatement. What's been happening recently is there's been a lot of conversation about states' ability to be able to exert their influence on the federal government.
The states have the ability to do that. But you know what the problem is? The states are dependent on the federal government. If you saw the amount of money that the federal government feeds into most of the states, you would say, my God, if something really happened to the federal government, what are all these states going to do? They get grants. They get all kinds of subsidies. They've got procurement contracts where the money is spent in the state. A state like Florida has the highest amount of people on Social Security. Those checks come to Florida. So if you did an analysis, and it was done by one CPA, and I get it every year. His name is Ed Meza from a firm in an accounting firm in Virginia, and you'd be amazed at how much dependency the states have on the federal government. Are they going to bite the hand that feeds them? Now, if I were running for office, or if I were in office, or if I wanted to be an ambassador, or if I wanted some kind of title, I'd probably say to myself, boy, I better be careful. If I yell too much, I'm not going to get any support. Thank God I'm going to be 75 next year, and I'm not looking for a job. Nobody pays me for what I'm doing. I feel like I'm Paul Revere, but I'm ringing a bell saying the Chinese are coming, not the British. And that's why I'm doing on your show. I go on a lot of shows. That's why I'm talking, because I'm trying to wake up America.
Well, it's a privilege to have you on the show. We look forward to having you back very, very soon. Thank you so much. It's a privilege having you on the show. This first broadcast of the new year, 2015. Look forward to having you on shortly. We'll be back right after the break.